I have 10 seconds before my computer self-destructs. Okay, so Rio's upset about Aussie. As far as things being fair, Rio, it doesn't apply to financial markets, fairness. Okay, Mr. Market is such a mean guy that he's going to shake out as many participants as possible before the move they're looking for occurs, then most likely without them. V, I'm getting a little message here that there's no sound on YouTube. Good morning, DJ. How are you? Those are my initials. Dollar is still mixed. I don't know what this was about, but to me, if you put a gun to my head, it's more negative than positive. The only thing is that we did confirm this high up here. I don't know what to do in the dollar. Really, the only thing I'm taking a shot in right now besides EG is trying to bottom pick the yen. And then I'm focused on other things. I have to say last week with all the bearishness in crude and some of the risk off selling we got last week in crude, it actually put in a pretty good week. And that was with S&Ps fought their way back, but we had this low pin bar here. So if we're going to hold this 51 level and we get through 58, the biggest surprise would be a continuation. Okay. Okay. See, my teammates are Skyping a lot. So just looking at Euro, I know that Greg is looking for 114. So that's a continuation to the upside. That could take the Dixie down to 96.5 or so down here. I know some people are talking 5.5, but 6.5 I think is doable. That's 100 pips from here. And the whole world wants to be short the S&Ps. We had that nice break on Monday, and it fought its way back. And Steve and I were talking about the weekly candle, which was, I guess, just a pin bar, still closed lower on the week. I'd like to see what happens if we could take out last week's highs by a little bit. Jim Walsh reminded us it's not a triple witch in August, but we do have we have option expiration for August this week. I'd like to see last week's highs taken out first, which, right around here, 29.40. And remember Friday, I was talking about when you get compression in the bully bands, the first move out is a fake out. And that's what we had Friday. So you had it coming out here, and now we're back underneath it. I'd like to see these stops taken out and then maybe attempt something on the short side up there. Oh yeah. I think that's really about all I have to cover. I had some oral surgery Saturday, so I'm having a little bit of a hard time talking today. Let's look at the yuan. And just like Steve, I rarely have a hard time talking. So the yuan is still, threatening, should have another new high in it. But I tell you what, this would be pretty constructive for the market, if only short term. If we could turn back the yuan, if the Chinese come in here and cap it and say in Elliott terms, this is an A and this is A, B, C for B, and then we get a C back down under these lows and maybe to the breakout around 7, I think that would take some of the pressure off the markets for a few days. I think the breakout's real, and it's not negated unless we start closing back under this big round number of 7. Okay, you can't see the bully bands, okay? When gold become weak, also destroy Aussie. So really the most important chart I have to show you today is this one. See this? Forest Park FX, someone saying that he sent an email about the reimbursement program. You could count on if you sent it to us or to Justin or Trent, you're going to get a very quick reply. Okay, so really, the most important chart are the people providing research for you 24/6, sometimes 24/7. Okay, I know a lot of people that are Ellioticians, pros that follow Grega, and they don't feel comfortable when they have a different preferred count. Blake is terrific. Stelios is terrific. Steve gives one of the best rundowns of the board every day. You could go anywhere. You come in here with no ideas by the time Steve is through. You're going to have a few things to consider. Joe made it safely back from Mexico. I think he had a couple of cocktails there. Paulie, you got to catch Paulie in European crossover so you're ready for face in the U.S. session. I think Amanda's taking a well-deserved vacation after riding the cable down for about a decade now, and we've all seen Andre's great harmonic work. And when you're with us, you get to see everything. You get to see. You need a dashboard, so you can't drive a car without a dashboard, and you know what? You can't trade FX without a dashboard, not without this one. So you get. Here's Greg as Elliott. I'll give it. So he's looking for a little pullback for 2 in here, and then the move to the upside. So you get all the charts. You get all the takeaways. If you're fairly new to trading, we have an education section, but you could compare harmonics. Andre's bullish. He's green. Oh, look, he's looking for a pullback. I saw a green light on it. It might be. And then we have a lot of neutrals. So you see a lot of neutrals, you stay away and look for something where there's agreement. Maybe there is in USD NOK. Okay, bearish, 3 bearish, 2 bullish. Okay, so it's almost like you have your own poll or DSI among ForexAnalytix technicians. So it's the best service out there, and I'd take at least a quarter. You can't make a real good assessment evaluation of anybody unless you give them 90 days. I don't care if it's a research service or a signal service or a newsletter. Anyway, so we have a pretty good week. In fact, an excellent week of guests, starting off with a grain guy, big veteran in the grain market. And you know what? You can't eat gold. And it's going to be interesting to talk to Dale Dirkholtz about the effects on agriculture with the ongoing trade war. And, he knows a lot of guys in the industry that are, taking the risk to grow food for us and very little reward compared to production prices and where they could sell their crops right now. So stick around for that. I've always believed that if we ever had the kind of economy that people are talking about with, deep depreciation of the dollar and some of the weather cycles that are part of this cycle, that food could be a great hedge, and agricultural commodities could also be a great hedge to that type of scenario. So in the 30s, when we were in a deflationary cycle, grain prices went into the basement. I think it's going to be different. We have a little different global population now than we did in 1930. And a lot of countries, emerging countries, changing their diets from mainly carb to starting to taking in protein. Soybeans being a great source of plant protein. So stick around for that interview. Hello, Blake, buddy. How are you?
Hey, good morning, Dale. It sounds like your oral surgery, at least I can't say it went well, but at least you're talking, so that's
Yeah,
right.
yeah, I'm just very sore and,
Yeah,
yeah.
it sounds like. Well, you know what? You did a
Oh,
lot of talking for being before. I'm impressed.
show
Yeah,
must go on, bro.
yeah, right. Thanks for being here. I know it's not always tough, and we're gonna have Steve is leaving for vacation again
Yeah.
tomorrow. So
He's like
he
Ernie Banks, "Let's take 2 vacations."
Yeah, well, they're Greeks, so Greeks that's what they do.
Opa.
Yeah, drink some ouzo.
Well, at least your
No,
wife has been Americanized, and she how many vacations a year do you take, Blake?
too many, more than Greeks actually. It's
Busted,
yeah, I
okay.
know I'm
Yeah.
busted. It's true.
Now he's gonna blame it to his
Uh,
half Greek wife.
that's right.
He's not
It's not my
interested
fault.
there.
That's
No,
screwing
Blake
him.
likes to travel.
If it were,
You got
if
that advice from the guy that guy Gallus told you to travel, you took it to heart.
he did, and that's the one thing when I first met. I won't use his first name, but when I met Mr. Gelos, first thing he told me is like, one thing you have to do is travel and see things and experience life a little bit because it's easy as an FX trader just to get and I'm very very much guilty of this. It's just sitting in front of your computer like feels
Yeah,
like your entire life, and I'd spend you know 12, 15 hours a day in front of my computer. It's like, wow, I need to really get out and go live life a little bit. So
good for you.
it's yeah, well, we all should.
Yeah,
This is the time of year where a lot of Europeans definitely travel throughout the month of August. Things are a little light volume wise, but let's talk about the markets and just in
okay.
general. And Dale, thanks for I know it's tough for you to be here, but thanks for being here. We appreciate you. You're
Oh, you're
trooper.
welcome, bro. I love hanging out with you guys.
All right. Well, we love you here. So, and guys, if you didn't listen to the Trader Fest over the weekend, I feel like I've worked all weekend because I got up Saturday morning. I got up at 3 o'clock to do this presentation. A couple hours later, and we talked a lot about the role of what the yen could be in a risk off situation, and as you can see, the markets have just taken a little bit of a spill, and the dollar yen has hit new trend lows, and we are well, when I say new trend lows, we broke last week's lows. We are at the 161% extension of this last move. We're now approaching really key support around the 104.50. I think the dollar yen eventually will break down. I'm looking to continue to sell rallies in the dollar yen. I don't think anything's really changed there. The euro is a currency that I think that we all need to be very careful of, and I think it's a candidate for a squeeze higher. I am bullish the euro. I'm long some euro New Zealand right now. This is a currency pair that I think can go a lot higher. When you're talking about uh, you're talking about New Zealand possibly taking their rates to negative, and you've got the euro in the ECB, which as of right now, we're zero bound, and it doesn't look like we're moving anywhere with the ECB. Uh, that means that the euro could continue to strengthen against the New Zealand, and I think this is a currency pair that could actually break above 176. And then once or if that happens, we're going a lot higher in this particular pair, and this is going to be driven by a lot of risk off as well. So I picked this one up uh, on Friday, and I continue to play it to the long side. And I think if we get a break above 174, then it's 176, and we'll continue on from there. The cable. A lot of people are wondering why the pound has bounced today. I think the pound is getting a technical bounce. We came right off of channel support at 120, perfectly actually. We'd been looking at this channel all last week. If you uh, look at ForexAnalytix, you go to the cable basic technical analysis. If you look at the 4 hour chart this is from last week, as we were breaking through this triangle, we talked about the support being out at 120. I think that analysis is still there. Um, uh, do, 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 um, uh, Cables weaker following the weaker GDP. We are testing lows. The risk of a move lower to the end of the channel, to the lower end of the channel, 120.25 is high. If we break 120.70, we did that. And then, obviously, when you're dealing with channel support, this is a lower moving trend line. So 120.25 was, what we were looking at on Friday. And then obviously today it goes even further. And tomorrow, if we still look like we're trending lower, the lower end of this channel is going to be below 120. It's going to be 119.75 or something like that. So the cable is recovering, but I think if we stay below this 121, its recovery may be somewhat limited. But I'm kind of just staying away from that for right now. The Aussie, extremely weak. Aussie, if you're wondering why the Aussie is so weak, just take a look at what's happening in Hong Kong. This is a very, very fluid but risky situation for the region. And if things continue to worsen in Hong Kong and China has to step in, this could get ugly for the region, but B, for the Australian currency, which is very sensitive to what's happening in China and in the region. So the Aussie is weak. I don't think there's any reason to be on the long side of the Aussie while you're below the support zone. So while we're trading below, you can arguably say 66, or excuse me, that's 68.50 ish, 68.60 ish. While we're below there, no reason to be on the long side of the Aussie at this point. And it doesn't mean the Aussie can't rally and we won't find certain areas to bounce. But I think that while we're below this, previous support zone, you've got to remain an Aussie bearer. And if you look at the Aussie in general, I mean, we're just trading in a new trend lows. I mean, this looks like we can actually test these lows down here around 60 cents, and that's from, financial crisis lows. And remember, you're like, wow, you're talking about levels that we haven't seen since 08 or 09. But remember, the focus right now is all on China, and it's not a good focus either. We're talking about substantially weaker growth in China and globally, which could really have a negative effect on the Aussie dollar and the Kiwi dollar for that matter too. And the Kiwi continues to trade pretty heavy here, and I think a risk below the 64-cent level in the Kiwi dollar is quite high. Break below that, and it's going to get somewhat ugly. One last thing I want to mention before Steve comes up here is the U.S. dollar Mexican peso. Talked about these emerging market currencies being very attractive shorts if stocks roll over. I mean, you have a currency like Mexico's, where the Bank of Mexico actually has rates around, I think, 8.25 right now. I have to go back and reference my notes, but when you have a currency like the peso, that currency has been used to buy currency funds and institutions globally to park money when the market is doing well. When the market's doing well, you want to get out of your euro currency, for example, or US dollar that may be yielding 0 or 2% and park it in a currency that's yielding you 8%. Well, when that dynamic reverses and we see stocks start to weaken, people have to reverse those positions. You get repatriation in this case back out of the, or repatriate out of the peso back into euros or back into dollars. And so as stocks become weaker, that will naturally lift these, the US dollar against the peso, the euro against the peso. And you know, when you're looking at the US dollar and Mexican peso, technically, I mean, this is a big, big triangle, and we're holding above the 200-day moving average. But man, a break above like 2020 in the US dollar and Mexican peso would be extremely bullish for this particular pair. And I think the risk is now tilted to a continuation higher in this particular pair, especially if stocks stay weak. So I unfortunately I didn't buy the peso last night. I was thinking about it last night. You know, we were above the 200-day moving average, and you know, we traded up a little bit here. And I'm like, I need to buy some pesos, and I'm like, I want to sleep tonight, so I want to make sure I, you know, stay away from it. Just, you know, I'll deal with it in the morning. And I got up this morning, and of course, we were just trading above the trend highs. Might have put in a false breakout here, but it doesn't matter to me. I'll be a buyer back down at 1950 if I can get it. You know, and that's something I'll be looking at today. I'll be looking for dips in the U.S. dollar Mexican peso to take advantage of a dip there. So anyway, just a few things that I'm looking at. And if you had the week ahead video, or if you've been watching the week ahead video, you probably got some of the talking points here that I mentioned today. But with that being said, I'd like to bring in my colleagues, Steve and Stelios. And I think Stelios is back in town too. Good morning, gents.
No, I'm not. Leave a beep. Leave a message after the beep. Sorry.
Good morning, Stelios. How are you?
I'm very well, thank you.
Welcome back. How was your trip away?
It was very good. I got a slight ear infection, but other than that, it was really good, really enjoyable.
What?
Sorry?
What?
What?
Sorry.
Yeah, nice.
Bad joke. No, so that stings when you get an ear infection on a little island where there was like 3 people that were on the island, and
yeah. The village I was in has a population of 500. There was 1 doctor.
That's crazy.
Yeah.
You know, I was you know, I for those of you that do not know this, I was married in Greece, and my wife and I got married on the island of Milos, where Aphrodite was found, right? So Venus de Milo, which would be Milos. Anyway, but that island I thought was a small island. I mean, there's maybe 5,000 year-round inhabitants, and I think in the summers, obviously, you're talking about a population of maybe like 15,000 or something. But that I thought was small. But 500, wow, that's a small island.
That's the village. The island actually quite big, but that's the village I was staying at.
The village that, yeah. So well, good to have you back, Steve. Are you going to an uninhabited island, or are you staying in the Peloponnese? Where are you going?
Zakynthos. It's in the Ionian Sea. It's quite a big island.
Oh, okay. You know, and for those of you guys that have never been to Greece, and I'll tell you, it's out of all the places I've traveled in my life, which I've been to a lot of different countries through my work and then through the military as well. I'll tell you, Greece is one of the few places that I can say I really would. I love going there, and it's one of the places I'd actually consider living, other than my home country, because it's such a beautiful place. But isn't it true you could really spend your whole lifetime traveling around to different islands in Greece and never visit them all, right?
Oh yeah, that's the case.
That's amazing. That's pretty amazing to me. So gentlemen, we have it is August. We're in the middle of the summer doldrums. However, volatility has picked up quite a bit. We saw the cable rally off of this what I feel was support. Was there any news that really justified this move, Stelios? Did you see anything?
I personally didn't see anything, but then again, I only just arrived yesterday, so I might miss something.
Got it. There was some talk that and Amanda's not here to justify this because she's out on her holiday with her daughter right now, but there's something about that you know, some talk about trying to block a hard Brexit, and you know, some murmurs about this, and maybe that's one of the things that kind of you know, took us off the lows. But I think I still think that the trend is very bearish in the cable.
Well, it looks like it until we get a result in this binary event, which is one of the biggest binary events I've seen in my life, really. So
Right.
True, very true.
So we got to wait till October 31st, really.
Who knows? Hopefully until October 31st, because who knows? Really, I mean, with this mess, it's not, nothing is 100%, nothing.
Yeah. Well, guys, I want to pass it back to you, and Steve, I left you a whole lot to talk about, especially with all these yen pairs and the strength that we're seeing right now.
This is the first to talk about, Blake. This is the most famous place to swim in Zakynthos. You might have seen it.
Oh, well, it looks like
the shipwreck.
Yeah, it's called the shipwreck. Yeah.
Oh, really? Why is that?
Because it has a shipwreck, if you see, on the sand.
Oh, that's awesome. That's really cool. Gosh, that's got to be beautiful.
It is indeed as beautiful as it shows.
Okay, so and that's the thing for those of you that have never been to Greece, I highly recommend it, and I highly recommend swimming in the Aegean Sea because the water there is it's warm, it's clear, it's not shark infested. Yeah, it's pretty amazing. So, all right, guys. Well, hey, Steve, have a great trip. I know we'll be chit-chatting with you. I don't know. Are you going to be joining us throughout the week, or are you gonna you pretty much checking out for the week?
No, I'm going to be spending some time with you.
Okay.
I think I'll join a couple of webinars.
All right, awesome. Well, we hope you can do it from the beach. And Stelios, it's nice to have you back. Dale,
I can.
Hope your mouth feels better, and I'll see you guys here all week. So.
Okay, Blake.
Thanks,
Blake. Thanks, guys.
Have a nice day.
Steve, we don't have any numbers today.
Yeah, we don't. We are very, very little light on data. Yeah.
Yes. So there's a couple of things I wanted to talk about. First, Blake touched on this. We had the main event in Argentina where President Macri basically lost a primary vote by a big margin to the opposition, which actually does include Christina Kirchner, who is the ex-president, if you remember. And the vote is actually in October, but this definitely brought a lot of uncertainty on the country and on the emerging markets, the area in general. So that's probably one of the reasons why the peso is underperforming. So that's certainly something to watch closely. Now, the thing I wanted to talk about is the dollar. Surprise, surprise. I was sitting on the beach and I was thinking about currencies. Don't ask me why I was thinking about currencies on the beach. But anyway, I was thinking about the dollar and what it's done over the past year or so. And if you bring up the US dollar index, I like the DXY, but it's too heavily weighted on the euro. So bring up a US dollar if you can, just like a weekly chart or something. And
haven't really updated it in a long time.
It doesn't matter. Don't look at there's no need to look at the analysis. Just look at the recent price action. We talked about this a couple of weeks ago on the webinar here. If you remember, last November, I think we were still pricing 3 or 4 rate hikes in 2019. Now we've had one cut and we're pricing 4 more until the end of next year. What has US dollar done? It's actually risen a little bit, like 4%. So
yeah, but I mean, more or less nothing. I mean,
yes,
volatility, its average through range has dropped. I mean, it's really not volatile.
Yes, and we see in rates terms, treasuries and Fed fund futures and all that, that's moved a lot. Like US Treasury 10-year yield at 170 something. Fed funds obviously pricing the rate cuts coming. That's all moved, but the dollar itself is kind of stuck in limbo, and I really don't get it. I personally don't get it. I think it's on the back of this global uncertainty, trade wars, even though it's Trump who is starting all this, right? I mean, he's throwing tariffs left, right, and center. Even though that's happening, the dollar has been and will be traditionally the place to go when there is great uncertainty. And I understand that. But there's a big gap now between what's priced in rates terms and what's happening with FX. So I am still bearish
Yeah,
the dollar
although-
for sure.
Although to be fair, if you want to see what the dollar has done against real money, that's what it has done.
Yeah,
No,
that's a
I'm
different
not
story.
kidding.
Yeah. No, I was going to talk about that. Then I was also looking at gold, and I was thinking, I'm already long a little bit of silver.
Because we can't see the depreciation simply because all fiat currencies,
Yes.
others more, others less,
Yes.
are on the same path to depreciating. Now, if the question is against what, the answer is against real money.
Yes. I actually had a conversation with some friends who I see every year when I go on holidays to this island, and some are quite wealthy, some are not. And we talked about, what's happening in the world. What do you think? They all asked me my opinion. And I see the big boys, the guys who have quite a bit of money behind them, they're buying real assets. They're getting rid of anything, they don't own any bonds. They're reducing their stock exposure, and they're buying real assets, land, and one guy's buying rare cars, and stuff like that, and gold and silver for sure.
As we consider it a given, that 1999 we had a bubble in stocks, tech stocks back then. We consider it a given that we've had a housing bubble in 2007. Nobody doubts that anymore. There is absolutely no question in my mind. In the future, and I don't think it's going to be that of a distant future, everybody's going to be considering it a given, that one of the biggest bubbles we ever had in history is the bond bubbles, right? The bond bubble, I mean. Because in essence, people keep forgetting, it's a whole different, asset, bonds. But what are bonds? Bonds are promises.
It's a promise, yes.
It's promises to pay a specific currency in the future with some interest, which is now being put in doubt as well, as compensation for the period you have to hold it, right? So just considering that, for example, you own a 30-year treasury, that means that the US government has promised you that in 30 years it's going to give you back dollars, right? And people are willing to pay such a low premium, to do that. Not to even consider that if we're talking about, let's say, Swiss bonds, you can go up to like 50 years and still have to pay Switzerland.
Yep, the whole German curve is, I think, inverted, negative as well now. But
up to 30 years. But Switzerland, I think, is more than 50 years, something like that. It's completely mad.
I personally understand buying bonds at negative yields. I get it, because some people or institutions might buy them with a speculative basis. They think that it's going to go higher, and it can. Or there can be structural buying. For example, in the UK, some pension funds, they have to own a certain amount of 10-year and 30-year gilts or whatever it is. So I understand that.
No, there's no question about the logic behind it, but only, but you explained it very well. Mostly it's speculation that you can buy today at X price and get rid of it, at some point in the future at X plus something price. So in essence, it's a bubble, because it's all about speculation that you can get rid of it at a better price than the one you bought it.
Fundamentally, for me, it makes zero sense to own bonds.
Fundamentally, it's simply nuts.
That's why I own 0 bonds at the moment in our portfolio. It's just I just don't get it. So I agree with you. It's a huge bubble, and the question is, it could go on for a while, but at some point you cannot have risk being so mispriced, because, like you said, it's a promise that the government is going to pay you back. So you're taking risk of the government, and you're paying the money as well. It's like you cannot. This for me is mispriced risk. And
I mean, only considering the FX risk so many years down in the future, it makes zero sense. Only considering that, not anything else. Other considerations are even more important, to be honest. But just considering the FX risk, nothing else.
Yeah. Anyway, just some thoughts I had over the last week, and I'm still bearish the dollar overall in the medium term, but you know, when things are tough, investors go to the dollar. I mean, we know that, and it's been happening for years.
Until they stop doing that.
If at some point.
Yeah. Okay. Yeah. So definitely, we had a big down day on Friday in the DXY. Actually, I wanted to start from the DXY, and then you mentioned it as well. So even better. The DXY has definitely been depreciating during the past few days. As you said, the market has now got to the point that it's pricing in 4 more rate hikes. You said, Stelio, right? Last time I checked.
Four more until the end of 2020, yes.
Yeah.
Roughly, yeah.
Yeah, in my opinion, Stelio, that shows very clearly that there is a lot of repricing yet to happen. Because in my opinion, there is 0% chance that by the end of 2020, we will have 4 rate hikes, 4 rate cuts. The reason being the following. In my opinion, by the end of 2020, it's either going to be not much change or back to 0%. In my opinion, there is no in between. And what?
I agree with that.
Yeah, I mean, I see absolutely no chance that we will be slowly cutting, that would imply what? 1 rate cut every 4 months, roughly, something like that, right? 5 months,
Yeah.
Actually, yes. I mean, it's August, 1 cut every, let's say, 5 months. So in my opinion, there's no chance. So, if things start going down, which, probably at some point they will, I think we're going to be back to 0 in very little time. So, the market will have to reprice multiple times, its expectations about the Fed's policy. And, there is a decent chance that is going to move the dollar as well. When I say a decent chance, we already explained why, because as we see, the rest of the central banks are trying to follow what the Fed is doing. So in essence, we still get to keep a rather low volatility in FX, because, if all the central banks are doing more or less the same things in tandem, that doesn't change so much, the interest rate differential dynamic between currencies. And, that's the whole concept there. Now, so bottom line, dollar, I was saying that the dollar was, depreciating during the past few days. What remains, though, a fact is that, it still trades within this ascending channel. So I think, jumping the gun, being short is probably not very prudent. We have to note, though, that if you're looking at it at the shorter term horizon, this 97.70, 97.80 area in the DXY, once we broke below it, it has really acted as a strong area of resistance. So as long as we remain below it, it looks very likely that we might see a continuation lower for a retest of this ascending channels. Support also coincides with this horizontal support area, so that's roughly at 96.30. So we might see a move down to 96.30. If we break below there, I think then we can start really talking about possible bearish scenarios for the dollar, and that's when I will start getting more interested in finding opportunities across the board to be short the dollar. Until that happens, I remain very nimble. I don't want to be very one-sided on one side of the market having to do with the dollar or the other. But as I said, the move below 96.30, and even more importantly, below the previous low at 95.84, is going to definitely indicate that there is some technical damage done to the dollar, and that might actually accelerate things to the downside. So, it remains to be seen if that's going to be what we get, but that is my assessment, and those are the levels to watch and monitor. Of course, the dollar has a tendency to move the whole market one way or the other, so obviously keeping an eye on it is quite important. Now, Blake spoke about the Euro USD and that he is bullish. Personally, as you know, I've refrained from having any position here, but I will have to tell you that I do understand why somebody, if I had to be something here with the euro in the short term, that would be, long as well. We already had like one nice rebound from this descending trend line support. And today is the 5th consecutive day that the Euro USD is consolidating in the middle of this descending wedge. So, given the fact that we're consolidating after a sharp move, short-lived but sharp move higher, I find it quite possible that we're going to have at least one more move higher. Why not? I mean, we can still move towards 113, 113.30, and still remain within this descending wedge. So one more leg higher towards that resistance at the very least is a very likely scenario. Now, if we end up breaking above that area, then I will start being, more interested in, in a trade here. Until that happens, personally, I'm not going into it, but I'm just saying that I do see the appeal of somebody that wants to be early in the market to be long here. Anyhow, in my opinion, you don't need to risk much. I would, depends on how tight you want your risk to be. You can even consider this 111.50 previous high as a possible support area. So, from where we currently are, I guess something like a 50 pip stop loss, 60 pips stop loss, looking for a move towards 113, 113.20. That's like 100 to 120 pips of upside. Doesn't look that bad, right? Equivalently, USD Swiss, I kept liking this to the downside a lot more than the Euro USD to the upside. You can clearly see here why. I mean, the USD Swiss has broken below this ascending wedge a long time before Euro USD ends up making any move. I mean, Euro USD hasn't made any move in quite some time. So USD Swiss looks, very decent to the downside, and it might as well continue performing well, especially considering the fact that Euro Swiss, in this slow path of depreciation, remains more or less unstoppable. I mean, it's a slow move lower since we retested the 120 area. Actually, the first leg lower was not slow, but what followed is slow. But keep in mind that it keeps depreciating, right? And as long as the Euro Swiss is depreciating, the USD Swiss is going to be performing better to the downside than the Euro USD is going to be performing to the upside. So, that's why my preferred instrument of, expressing a viewpoint there, if I wanted to do so, which I don't yet, would be the USD Swiss. Okay, now Euro Yen. We talked about this idea when we were breaking this triangle to the downside. I think it still looks very good. We've broken through the previous spike low, and the next confluence of supports is at 116.50. So as you see, euro not really performing well against anything, does look better against the dollar at the moment. But if you have a look at the euro against most of the currencies, I really don't like it. I mean, if I had to choose to be long the euro against something, I would probably go in the direction that Blake mentioned, because clearly commodity currencies are underperforming. So if you have a look at the euro against the Aussie, especially against the Aussie, I wrote that in the chat room last week, at the end of last week. At some point I wrote that euro Aussie was retesting, when we were here, was retesting the breakout area support, and that might be a good buying opportunity. So far, this has played out quite nicely because we're more than 150 pips above those lows. So yeah, still looks like a decent buy against the Aussie. If you have a look at it against the Kiwi, also very decent since it has broken above this potential like large triangle. Seems to be consolidating as long as we remain above that broken trend line. I think that, you know, Euro Kiwi looks rather decent. Even the Euro CAD, although, you know, that is not one I would really want to be trading, simply because, you know, choosing to be long or short, you know, a weak currency against a weak currency and just speculating on which of the two is going to be weaker than the other is not what you want to be doing. Usually you want to go with the odds being in your favor, in the sense, you know, trend trading, we know that, you know, is performing better than anything else on average. Of course, there are, you know, magnificent traders that, you know, just try to catch reversal. There's no question about it, but there is also no argument against the fact that, you know, trend trading is the easiest and most profitable type of trading, right? So you know, that is why you usually want to pick something that is strong across the board against something that is weak across the board, because that gives you a pair that is probably trending the best. So EuroCAD is the exact opposite of that. Despite that, we had been looking at this descending wedge, and once we were breaking above it, I said, okay, now we can really see some, you know, upside movement taking place here. And yes, we did have like a nice short-term sharp bounce higher. I think we might see another leg to the upside. So even EuroCAD looks rather decent to the upside. EuroNOK, I keep a close eye to this. This is very interesting actually, because it head faked like it would break lower from this like multi-year ascending wedge. Good thing, you know, that usually it's nice to have confirmation. So this horizontal support area never broke to that downside, and then we got this very, very, very sharp move to the upside. Currently testing previous highs. Actually, we spiked to new highs last week, never closed above them though, and you know, we seem to be consolidating here. So even EuroNOK looks like it can actually you know, explode higher from here. So as you see, against commodity currencies, euro seems to be performing decently, even stabilized against the MXN, although as you see, this is not really a trendy market. But you know, even against the MXN, it seems to be trying to, you know, to catch a bid here and move higher. It found support there and seems to want to perhaps, you know, produce some continuation. So euro looks okay against commodity currencies, not okay against anything else. So the question is, should you be buying the euro? In my opinion, you'd rather find something that performs less, you know, has a less of a mixed bag performance than the euro. But regardless, I do understand and I do respect the fact that sometimes, you know, you see a chart that has a beautiful formation, and you know, although you know that might not be the best combination, you know, you trust some kind of a formation you see there. It gives you, you know, a very appealing risk reward. So you know, you go ahead and take that trade. I've done it myself several times. So you know, I can appreciate you know, the approach and, you know, the way of thinking. Now we have a friend here that, you know, keeps making comments about how unfair is the FX market. As I explained to you, my friend, last week, and specifically how beaten down the Aussie is. Blake already explained, you know, partially why the Aussie is underperforming. We know how correlated it is to China's performance. And yes, the Aussie is trending at lows. It remains under pressure. Once again, it rejected the first area of resistance it found, and that's really bad news for people that want to be long. First of all, I want to reiterate what I said last week. There is no fairness in trading, and you know, if you try to make an argument that, you know, it's not fair for X to perform that way or for Y to perform the other way, I think, you know, you're going to have a very tough time in trading. I can give you a rather recent example. I mean, it feels recent to me. I understand that some of you are, trading for less time. I remember back here, now this is the Aussie USD on a weekly chart, right? This is one of the widow makers I remember in my trading career very vividly. Because back then, when the Aussie was trading above parity, everybody was looking for the Aussie to weaken. Everybody, for good fundamental reasons. I mean, purchasing power parity was showing that the Aussie should be weaker. The Big Mac index was showing that the Aussie should be weaker. Relative performance of economies was showing that the Aussie should have been weaker, etc. You name it. So everybody was attempting to be short the Aussie. Keep in mind that back then, the Central Bank of Australia had higher rates, which means that being short the Aussie against the USD, for example, had a negative carry, right? So you had to pay overnight a decent amount to hold that position. And, people were just, being stubborn, waiting for it to weaken again and again, week over week. And, they kept losing money just by holding the position. Sometimes they got sharp rallies going against them. I think a lot of amateurs, I know that a lot of amateurs blew up their accounts back then, expecting what ended up happening. So, it's one of the cases that, everybody expects something to happen. It eventually happens, but by then, people that are stubbornly premature in, expecting something don't have a trading account to claim victory afterwards. Okay. And then, once it broke down from this triangle roughly at 98, something, it's been downhill from there. I mean, we went from over parity. We're currently testing 67.5 cents. Okay. Now, so basically, there is no moral code in performance of, currencies, stocks, or whatever. There are just fundamentals, which if you want to trade with them, you need to have a big account, huge patience, and I hope that's not going to rate us PG-17, but balls of steel, because that's really what you need to do in order to trade just by fundamentals. And there is also the approach that you should, of course, consider fundamentals, but your trigger should always be technical, right? Because from a technical perspective, you're going to get a signal when something is about to really shift. So instead of trying to anticipate a rebound in Aussie, in my opinion, you should just focus on the chart, which says that so far neither Aussie or Kiwi look like they're about to rebound. Now, if we see some type of a sharp reversal and then other factors that point in the same direction and they really want to rebound higher, trust me, I mean, you don't need to bottom pick it. You're going to get an opportunity to be long and make some decent money. But trying to catch a falling knife is not a good idea. Having said that, as you see, the Kiwi against the USD is still striving and succeeding in holding this horizontal support area. So, bulls, let's say, can maintain some hope here. I can't say the same about the Kiwi yen because we had noted the significance of this horizontal support area, which we've now broken to the downside, and the Kiwi yen is trading, a lot lower. To demonstrate it even better, I can completely get rid of that zone and just extend this one because you'll see it's the same zone. So as you see, this horizontal support resistance area dates back to 2009, and we all know what happened in 2009. So it's quite a significant area, and we've now been trading below it. So Kiwi yen really, from a technical perspective, a really, really bearish outlook here. If you remember last week when we were testing support here, I said that, listen, by looking at the Kiwi against the USD, I don't think the Kiwi is going to be doing well. By looking at the USD against yen, more or less the same. And as you see, both of them have continued lower. Speaking of which, I know that Blake made a very brief mention on that, but let's go ahead and have a look Here's the USD against the yen. This is what we drew back then, move lower. And we're now getting very, very close in retesting this spike low at 104.65. Really nothing looking bullish on this chart so far. Okay. So, that's one of the main factors why the yen pairs have been underperforming so horribly. For example, another week against strong currency. This, for example, was an excellent opportunity to be trading some time ago to the downside, the pound against the yen, because the pound kept being weak and the yen kept appreciating. So look at this move in the pound yen, and I'm pretty sure it's not done yet. I mean, we recently, like on Friday, broke below this little triangle once again. Next downside area, the 127% extension at 125.75. We've also broken below this descending trend line support. So, I mean, yen pairs, the vast majority of them look really, really weak. We saw euro yen, we saw the Aussie and the Kiwi against the yen, we saw now the pound against the yen. Let's have a look at the CAD yen. You'll see that it's more or less the same deal. Here it is. Broken below this zone. I think this is probably bearish consolidation again, so why not a continuation lower towards the spike low at 77.50. Anyhow, enough with the yen pairs. We have some questions about the metals. I can briefly go over those as well because we have an interview. Here is gold. Gold consolidating. This is the fourth consecutive day that gold is consolidating at the highs. So far, showing no intention, to really pull back. I know that positioning in gold has started getting to the extreme level, and at some point we should see some pullback. But trust me, it can get more extreme. Okay, so we're currently consolidating at mostly it's not a technical level here. I mean, if you go back to the chart, but it is a psychological level, right? 1500 is a psychological level. But once we get past 1500, I don't really see any real resistance area until 1550. So we can easily move another $50 to the upside here. Silver has already made a big technical move above this trend line, broken this flag. The next area of interest is at 17.5. So I do think that 17.5 is probably something we're going to soon see having to do with prices here. Let me briefly go over your questions. Intervening, your thoughts on probability of Japanese central bank intervening on yen as UJ gets closer to 100? Zero. Nothing is zero in this life, right? Because so I just answered the question, not what are the chances, what are the chances in my opinion. So in my opinion, I think that the USD yen is still at a very decent level. And I think that the Japanese central bank is nowhere near the level that it would consider intervening in the USD yen. So I don't think that the USD yen is in danger of turning higher due to the BOJ. Okay, I don't think we're getting there. And having been a trader for several years, I mean, even when I very well remember the times when the USD yen was trading at the 70s, slowly depreciating towards 70 something. I can tell you one thing in advance. I don't think that the BOJ is going to intervene without first verbally intervening or warning about an intervention. Judging from the past, I think that if they start getting uncomfortable with the USD yen level, they will first start talking about it for a period of time. And if that doesn't prove sufficient, they will then consider doing some actual intervention. So I think we're very, very far away from that. Okay, so I don't think you should worry about it. Not yet, nowhere near. Okay, and let me also cover crude. Coach is your guest here. Oh, I hope I don't have the bug again that I can hear Dale speak.
I can't hear him either, but
Okay. So then, okay. I could hear you, Stelio, so obviously no such an issue. Okay. He said we have an interview.
Yes, Dale is here.
Okay. Okay, Coach, do we have your guest here?
Yes, Dale is here.
He has the same name as you. Okay.
Yes.
Okay, perfect. So let me finish with that 30 seconds and it's all yours.
Okay.
Crude considers being, very technical. It spiked low to retest this previous double bottom here at 50.5. It rebounded from there, but, be careful here because $54.80, $55 is a previous horizontal support resistance area. So I would be a little bit careful here. I consider it a decent probability that we might get rejected from the current level. So if I had to be something with crude now, it would definitely be a short retest of this head and shoulders neckline, horizontal support resistance area. So quite an interesting level if you're looking for very decent risk reward opportunities to be short crude. And one last thing, I'm still short the SPX from my second short. I'm in from 29.30. People in the chat room know it. I like how we got rejected from equality at 29.40 here, of the two legs higher. So far, the move lower is not impulsive. I have to admit that. And 28.90, we almost spiked to that. Is a horizontal support area of interest. So I do think that 28.90 is going to be the judge of what's going to happen with stocks from here in the short term. If we bridge through that, I think we're headed lower from here. Now, if we rebound from there, we might need to retest 29.60 before resuming the downside. Okay, Dale, enjoy the interview.
All right, thank you, Steve. Dale, thank you for your patience. I'm now promoting you to panelist, and I'm going to unmute you. Look forward to hearing your screen. You're unmuted. Welcome to Face Dale Dirkholz.
Yeah, it's not often I get to talk to somebody else by the name of Dale.
Yeah, let me ask you something, Dale. Did you get teased as a youngster about having a girl's name?
Gee, what was your first clue?
Huh?
What was
Dale Evans, Roy Rogers?
Oh, yeah.
Huh?
I mean, that was a persistence. And the odd thing about it, I grew up in Central Illinois, my dad was a farmer, grew up in a small farm community. And in my class, there were 5 other boys by the name of Dale.
Oh, my goodness. So I have an agricultural based name.
Oh, I guess.
Right? I don't know. Anyway. Yeah, anyway, great to meet you, Dale, because I've been following you on Twitter for years. And, being from Chicago, I had a lot of friends at the Board of Trade, and I always loved trading grains because they were great technical markets and always had an interest in them and admired people in agriculture because it takes a lot of courage to have the faith to put a seed in the ground and hope you get the weather and hope you have a good harvest and then hope market conditions are good. A lot of hoping so that you can make a profit for your labor. So in fact, when I was a cynical commodities broker a long time ago, Dale, I would say my life is like a farmer, up before sunrise, asleep after sundown, except that I nurtured seeds of greed for the harvest of commissions.
It was funny. This would be about 10, 12 years ago. And I live about 50, 60 miles from where I grew up, not by design, because if I had a place that I would like to live, it'd be Kalispell, Montana, but career kept me in the Midwest.
Okay.
Went to see my father, and it was late afternoon, about 5, and walked in, and he said, "You look tired." And I said, "Dad, let me tell you about my day." Then again, he's an old farmer.
Yeah.
I said, I get up in the morning at
4.
6 o'clock. Huh?
Oh, at 6?
I get up at 6 and and I retired back at the end of June.
Yeah.
Do some consulting stuff on the side now, but I said I get up at 6 and I see what the market's doing. I go through news wires, and I eventually have some breakfast, shower, go to the office, get in about 9, spend all day, get done about 6, go home. And when I get home, walk in, say hi to the wife and play with the dog and whatever. And I said, then I look to see what the markets are doing. And he said, look to see what the markets were doing, because he was not aware of the fact that we were trading 24 hours a day.
Oh, yeah. That
Recounted the whole
changed everything. Yeah.
I recounted the whole schedule to him of trading at that time. And he said, how do you sleep at night? And I said, it's easy. You just go to bed and you go to sleep. I said, that's all there is to it. What happens, happens, and you get up the next day.
Yeah, that was my big adjustment with FX, because that's 24/6.
Yeah.
I didn't know that the grains. I know we had an aftermarket. They're not that active though, are they? Except maybe now they are with the tape bombs about trade wars. I wanted to let you know, Dale, that if you just scroll your mouse over the top of the drop-down menu or the bottom, you'll see a green box that says share. And then you can share your screen, because I know you prepared some things for our community today. You see it?
Yeah, it says share screen, right?
Right. So click it and take it.
There we go.
There we go. Okay. All right. So, usually I start off, I ask people, how they got in the business. With yours, it was a genetic thing. So I know how you got in. A lot of people that grew up on farms, I don't care if it was cotton or grain or whatever, had a natural inclination to seeing how markets moved up and down, and wanted to learn about it and how to capitalize on it. So why don't you tell us about early in your career, when you started in, say, for example, trading? Were you out there prospecting hedging accounts? Because that's really why the markets were developed.
I'll go back and start when I was roughly in grad school. I did a stint at the University of Illinois, got my undergrad there, but I went back there and I looked at about 5 specific universities, ended up going back to the University of Illinois to get an MBA.
Okay.
And I was specifically wanting a college that had a good business program, number one. Number two, one that also had a strong ag department, particular ag econ. At the University of Illinois at the time, the primary professor in ag econ was Tom Hieronymus, who wrote one of the mainstays of books for the commodity industry itself. So that was
right.
My first taste, and I got a chance in grad school. I did some independent study with him as well. So
obviously you didn't care what kind of football team the college had.
Obviously I didn't. There have been,
I've been down there, and I love the Fighting Illini, and we're from the same state. Only I went to a commuter school. I went to school in DeKalb, but
you went to Northern?
Northern. Little did I know, when I was driving back and forth in the cornfields, that I was going to become a commodity trader. It was the last thing on my mind. So you got all this formal training in agriculture. Did it help you to become a trader?
Well, it really did, some things there, because when you're in college, and specifically when I was doing independent study with Tom, I got really immersed in some different fundamental things that go on in the marketplace itself, and from there I went out to, was lucky enough to graduate with a degree at a time when the economy sucked. That was 1974, 75. And,
we're the same age, buddy. That's when I graduated college.
Well,
we're around the same age. That was
from grad school. I was
okay. So you're the only guy I've interviewed in a long time that's older than me.
With the same name.
Yeah. Okay. So, no. Yeah. Okay. So.
But I went to work with producer consulting firm in Iowa, and we basically work directly with farmers. And again, this is 1975, helping them, cope with the volatility in the market at that point. And for those out there that don't know the history of the grains, 1972, 73, the great grain robbery when Russians bought massive amounts of crops from us here. 1973 was the great soybean rally, in which we touched actually $12.90 back in the summer of 73 in July futures. And
so that's where the chant beans in the teens, it took what, another 20, 30 years to manifest?
Oh, yeah.
Yeah, beans in the teens.
And I've actually even got a T-shirt a friend of mine gave me at my wedding in 1983 that said "beans in the teens."
Yeah.
And at the back it said "someday."
Yeah. Okay.
And we finally got there.
Okay.
But in any case, a lot of volatility. I was working with farmers really as on a consulting capacity, not doing trading, and from there. It was either 79 or 80. I went to Chicago. I worked with two mid-sized commodity houses, which at that point, as you know, if you spend time, there was a lot of medium-sized commodity houses as well as a handful of big behemoths, basically the wire service houses like Merrill and some of those.
Right.
So I did spend time then for 8 to 10 years doing mainly research, mostly in the grains, did it in the meats. Ironically enough, my background and experience and everything was in the grain markets. But the commodity houses I work with, one of the guys wrote the pork belly contract, and another guy I worked with, his company, he was part of the writing of the live cattle futures contract. So
who wrote the belly contract? Because I know Sid Madoff was really big in the belly.
That's who I worked with and worked for.
Oh, you know what? That was my first job as a registered rep at Madoff and Sons.
Really?
We probably met each other. Yeah, I was above Union Station. I traded upstairs.
Oh yeah. Wait, what years were you there?
75, 76, 77. And then I moved out west. I figured if I'm going to be off the floor.
You would have left right before I arrived.
Okay. All right.
If you knew Sid and you worked out of that office, you would have known Maury Schneider.
Oh, yeah. And his son, Larry. This is like old home week. Yeah. Maury was at the Dean Witter desk when I was a runner, and John Greco would give him orders to fill. How about that?
Old names. Anyway.
Yeah. All right.
Maury passed away about 2, maybe 3 years ago.
Yeah.
And he was still trading.
I talked to his son. Yeah, he told me about it. So, God, it's like a reunion day on Face for me today. So, okay, this is history, and we're from about the same era. And Russia was the big player then in grains. They've been replaced, right, by Russia because by China, because I remember interviewing the goddess of grain, Angie Setzer.
Angie.
Yeah, and Angie was saying the Chinese had been stockpiling wheat big time for years. Do you think they saw the way they planned things, a potential trade war coming down the pike, and that's why they started hoarding, besides gold that you can't eat, wheat?
Well, now China is kind of a different story in that regard. I don't think it's so much a game of story. And part of the stockpiling of the wheat had to do with all the evolution of the last 15 to 20 years of their
diet,
ag programs and economic policies in China, and what they were doing in wheat and corn and even in rice, which are the three mainstay crops that they produce. They're a small potato producer in soybeans.
Okay.
But those three, they had what I would call artificially, or maybe we could say unusually high prices for those particular commodities they paid to producers. And really the reason they were paying high prices to producers was to slow the movement, migration of people from the rural communities to the cities themselves. They were trying to manage that migration of people, so they were paying high prices to sustain some profitability.
Mhm.
The downside of that is that farmers, as you know, you get paid good money, you produce a lot. And so they were producing more of those three particular items than they were consuming. The same thing happened actually back in the 1990s. They had built huge inventories of corn and wheat in particular through the 90s, in which case right at the end of 90s, early 2000s, they liquidated those only to start that over again. But today, as it is, China controls roughly half of the world wheat inventories at the end of the marketing year. So,
Wow.
they have been stockpiling, but it wasn't because they were seeing something unfold in commodity prices. It wasn't because they were seeing something happen to where shortages could loom. But to a small degree, a background factor in part of that as well actually ties in and has to do with the fact we're talking about a country that's known famine. And
Okay.
so they have a desire from a political point of view to maintain reasonable inventories of foods. Basically, I don't want 1.3 billion people to get angry if I'm in the government.
Right.
And
So they were, yeah, they were, because they lived through that, they were scarred by it, just like maybe our grandparents were by the Depression, and they became ultimate savers and hoarders and didn't want to held on to their last dime because they knew you could have a rainy day. And
oh,
yeah, so that's interesting. Yeah, we've never had famine here in the U.S.
we really haven't. The closest we've had would be the 1930s. That
Okay.
closest.
Dust Bowl?
Excuse me?
Dust Bowl?
Oh yeah.
Okay.
Bowl.
So I see by your handle, and it's a new handle since you retired. How was your retirement dinner?
Actually, I retired at the end of June, and I promised myself, people kept asking me what I was going to do, and I said, for 2-3 weeks, nothing.
Yeah.
And I thought that was important. I wanted to wind down a little bit from getting away from a day-to-day grind and kind of relax. I had a lot of things. I live outside of Bloomington Normal.
Okay.
For those listeners out there, Bloomington Normal is the home of State Farm Insurance.
And Illinois State.
Oh yeah, I had a lot of work to do in my yard because I have about 1.5 acres that's built on an old piece of virgin timber.
Yeah. Okay.
So I had a
So
lot of yard
in
work.
your new handle, which I find, I like grain, but the interesting part to me after underscore is cycles, because guys like you and I have seen a few, right? So, and we know everything is cyclical. And, the big deal for when I was strictly a commodity broker were weather cycles, La Nina, El Nino. You prepared it. I don't want to get ahead of what you prepared, but tell us about the cycle we're living in now.
The one thing here, and let's back up and just go to, if I can.
Yeah, you could just click it. It should change. There you go. Okay, we have the monthly continuous CRB.
Commodity index. That used to be called the CRB index.
Right.
And so Reuters bought it in 2005 and changed the way it was compiled, but they continued on the way it used to be compiled, which is the continuous commodity index, which I think is probably still the better one, but it's got a history that goes all the way back into the late 1940s.
Okay.
So it's a good long-term thing. You'll see there at the beginning over on the left-hand side, the push we had there in the 70s, that was when commodities rose rapidly in 1972, 73, 74. And that was basically the beginning of the inflation spiral we had back in the 70s.
That was the win buttons, whip inflation now?
Yep.
Okay.
When you go back and you look at this, there's a long history of having if you want to get big, a 27-year cycle, low to low, and all cycles are counted low to low.
Okay.
And you can even push it out to a 54-year cycle, which interestingly enough ties in pretty closely with you probably read about the Kondratiev cycle.
Yes.
That guy, a Russian economist, had found 60 years. But, when you look at a long cycle, basically you start talking about a margin of error or a window of opportunity that's roughly about 15% either side of your projected date, maybe get it down to about 10%. So
Okay.
you look at that 54-year cycle, it ties to the 60, but breaks down into 27s, which you can watch, which also breaks down into 9s, and even the CRB itself, or the continuous commodity index here, breaks down into 3-year. And what you see here,
wow, there's that number 3 again.
Oh, yeah, lots
Well,
of time.
to me, number 3 is the number of completion. I trade a lot of 3 drive formations. So anyway, that's interesting that it breaks.
You're an Elliott wave person then.
No, I just learned that from J.R. Hill in the 70s, and it just started noticing how the number 3 came up in a lot of things that we're completing, third time's the charm, third planet from the sun, a lot of 3, 3 strikes, you're out. A lot of 3s out there, Dale.
Oh, 3s and 7s.
Yes.
That's also goes back as an old
biblical.
An old technician once told me, and this guy was Jewish, a great friend of mine.
Yeah.
That in the Bible, the numbers 3 and 7 are the most mentioned.
Huh. Okay. Who was it?
Mike Goldman.
Okay.
He used to have a seat on the old Mid-America Commodity Exchange.
Oh, sure, where they traded minis.
Right. He actually grew up in the cotton business. His dad was did something with cotton, and I don't remember what when he was a kid. So he grew up in the commodity business too, but he was purely a technician, and he taught me a lot. Never would teach me some of the secret details of what he did, but as I found out through the years, he used a lot of cyclic parameters, and he also was an Elliott wave person. And the reason I ask you about if you were an Elliott wave person is that, in a bull market or in a bear market, many times you have 3 distinct moves up that unfolds in a 5-wave pattern in Elliott wave.
Okay.
And there are also a lot of corrections.
I know enough Elliott to be dangerous.
But what I do today, a lot of it, I look at technically simplistic bar chart patterns. I look at some basic indicators like stochastics and RSI, and I look at some MACDs, but I rely a lot on cycles because they give me timing. Right. And I rely a lot on Elliott waves because that can generate some price targets for moves up or down, either one. So I found it to be a good combination. And then I'm still basically a fundamentalist. So I'm kind of an unusual animal, you might say, when I look at commodities, because I'm a little bit of a number cruncher and a little bit of a picture observer to see what's going on. But notice here where the key is on this graphic. That was the last time we had a major low in the commodity indices. That was a 9-year low, also a 27-year low. Back there in 1968, we actually stretched that cycle a little bit. We bottomed it in 1999, but the interesting twist and looking forward for everybody out there is that the next 27-year low is due in the middle 2020s. And when you start thinking about this, there's a lot of reason to think that what we're going through in commodities in general right now is potentially a lot like what you and I went through in the 1980s and into the 1990s. So, I'm looking ahead. I see basically not a day-to-day, week-to-week, or even month-to-month, bearish market, but I see a longer-term trend that, we passed the major peak in 2012, like the one we passed back there in 1980. So I'm always looking.
1980 was the peak in gold too, when Russia invaded Afghanistan and Maury Kravitz ran the gold pit at the IMM. And then the peak you have at 2011, 2012 was the last gold peak at 1900. So you've seen a lot of tie-in with gold and grain prices and the whole commodity complex.
And you see a lot of that tie coming in crude oil too. If you look at some of that, there's another thing here, and if you look on down here, and we'll go into this, which is a graphic I ran across here recently, which was interesting. I've got other looks at it, but this is the dollar itself, and looking at the dollar index. And what you'll notice here over in the, again, the far left, we had a hard break in the dollar when we took the dollar off the gold standard. That was also part of the big commodity rally we had in the middle 1970s. And the dollar itself stayed weak all the way into 1980, which goes hand in hand with bullish commodity prices, bullish gold, bullish crude oil, and everything of that ilk. And then came Paul Volcker.
Yes, the liquidator.
Interest rates took off like a scalded rabbit.
People wouldn't believe it, Dale. What was the T-bill, 90-day T-bill trading at in 1980 when Volcker started raising rates? Do you remember?
All I know is that we were well into the double digits, but I don't remember the high.
Yeah, I think around 18%.
Yeah.
Yeah, up there. People were getting mortgages. I think their mortgages were 17-18% to buy real estate back then.
Oh yeah, people today worry about 30-year mortgages getting up 4% and they're too high, and I go, you haven't seen anything.
Yeah, we're at 300-year lows in rates, or maybe even 3,000-year low in rates. So your dollar chart, it looks to me, I'm just guessing, is that the dollar came out of this triangle. Looks like a year or so, and tested it on a pullback towards that 87 level or 84, and it's a wave, the purple line, the wave of potential peak that'll be coming up in April of 2021.
It is, but the only thing, we don't have a lot of history here in this, because the dollar hasn't been freely traded for enough years to make any sense out of. The only thing I really come back and see when you look at, the peak we had back there in the late 60s, and then we had one again in 85, and then we had the one in 02, you got about a 16 to 17 year pattern high to high, which I don't like to deal with, because highs in markets aren't as regular as lows. But
interesting,
considering our last high was in 02, and you go 17 years out is 2019. So I'm really watching, how this thing performs here over the next number of months. Do we take out that small peak we put in 2017 yet, or have we,
is it over
out of gas, and are we going to end up in Elliott wave terms, having what I'll call a failed fifth wave, in which we actually don't see the fifth wave make a new high, which ultimately is real bearish. But in any case,
rare, what they call that, truncated.
Yeah, it is rare. It doesn't happen, but when they do, they're real negative. But the point I put the dollar chart up here for, and also there's another couple here that I put up. There's the Brazilian real and the Argentine peso. And the grains, I don't look at the dollar so much itself, because the dollar is too heavily tied to the euro. About 60% of a trade-weighted dollar is tied to European currencies of some ilk. So
you go to South American producers and look at their currencies. They give you cues?
Yeah, they do. There are different things, but there are four I look at: the real, the peso. I look at the Russian ruble, because they're such a big commodity player today. Russia. Think about it. Well, when we got in the business, the great grain robbery, they were the #1 wheat importer in the world. Today, they're the #1 wheat exporter in the world. So the ruble has huge importance. And the crude oil, the ruble has huge importance. And the fourth one I watch is the Chinese yuan. But to step back and show you the importance, here's looking at soybean futures priced in Brazilian real. So we've been in somewhat of a bearish market here as far as soybean prices are concerned, going back to 2013, 2014. But when you put the real in the mix, the Brazilian producer and even the Argentine producer have seen prices go to new highs.
Because of currency weakness.
With that, you are seeing continued incentive to expand production in South America. And that relates back into some fundamentals that you go to here when you look at available land. If you go into Latin America, we have about 300 million hectares. But when you look at sub-Saharan Africa, which is the one I think long-term people need to be watching for, we've got over 500 million potential hectares of land that can come into production. Here in the U.S., we actively crop.
They have water there?
Sub-Saharan Africa, you do.
Okay.
You know, I mean, that's where we get a lot of cocoa and coffee and
okay. Ivory Coast. All right.
Right.
Got it.
It's basically south of the Sahara.
Okay.
It's where Africa, you know, if you look at think geographically at where it starts to get constricted as far as size, just south of the Sahara. That's where we think of, you know, the great migration patterns of the wildlife there, but they have a savanna climate. But when you step back and think about it, that's really the area in Brazil where we're raising corn and soybeans. We have a savanna climate. So they've got huge potential there, and their land mass eclipses by a large measure what's available in South America yet. By nature, when you look at the United States, 1 acre is about 2.5 hectares, and we farm about a little over 300 million acres here in the U.S. So, you know, if you start talking about that, you're talking about here in the U.S., we're actively producing on about 120, 150 million hectares.
Okay.
So you're looking at huge available land mass, and that's where people in agriculture have to watch. And right now, it's the watches in South America and what happens down there. We started back in the middle 1990s. This was after the Russian embargo, and then we had some other issues that came into play in the 1990s. They really started to aggressively expand production in South America, and that hasn't stopped yet. And it's still underway. And now, you know, of recent, we've had this Chinese trade war, and their prices tend, on average, to command a little bit higher price than out of the U.S. because of the negative drag in soybeans in particular of the tariff on U.S. beans. So they're continuing to see that incentive to expand stuff. You know, so it's going to be a landmass change, but to give people a history of the fact that you really step back and you go, you know, the same thing happened here in the United States. And you would remember back in the 1970s, it was plant fence row to fence row when Earl Butz was Secretary of Agriculture, you know, and we expanded our land area under cultivation quite rapidly. The only thing that's going on now is that we're doing this in South America. We're also doing it with the markets being freed up over in Russia and Black Sea area. We're expanding production over there rapidly too. So we're seeing the world outside of the U.S. and even outside of China really expand their production capabilities. And it's going to be a problem for U.S. agriculture and U.S. prices going forward, I think. Okay. You know, when you look at some things today, as you know, we have a huge report coming today. We've got a USDA crop report coming out here in about 2.5 hours. Okay. We'll get our taste of.
Well, the Duke brothers have a big bet on OJ.
Great movie.
Remember that line? Turn the machines back on.
Yeah.
Yeah. All right. Anyway,
I tell you, people in the trading business love that movie. It was done.
The bathroom scenes were pretty realistic. Anyway, so we have a big crop report, and what are you looking for?
You know, this one's unusual compared to a lot of August crop reports. We actually, as you'd remember, we start the cycle now of going through the late summer, fall reports from the USDA telling us about what the production potential is out there. But because of the weather we had this spring, and, you know, some of your listeners may or may not remember, we had one of the worst springs we've had on record. I thought after going through the floods of '93, I'd seen the worst of a a wet spring summer that I would ever see, and this one was even worse. And we had, a lot of corn that was planted in June, beans end of June, beginning of July. So you really planted extraordinarily late, and right now we've got crops in terms of developmental stages that are probably, I'm going to say, on average, roughly about 2 weeks behind. And that's critical because that says, to get full development of the crops themselves, you need to have a late fall and have those initial frosts and cold waves come later than normal to give the crop time to develop. But today we got a report coming out. Here you see the black line, that's U.S. yields. I have a bit of a different look at trend on yields on the grains. And it's one that a lot of people look at and they go, that is interesting. And you see it even in South American production as well. But beans tend to on yield go up in stair-step fashions. They aren't as much of a linear trend as shown there in red. Okay. But right now, you've got people thinking we're going to have a bean estimate coming out from the USDA on yield that's going to be about 48, 47 bushels to the acre. In corn, a lot of people seem to be about the middle 160s, which would put us roughly down to the trend that I use, maybe just a little bit underneath it at this juncture, but unusual for the August report. Probably the thing people are most waiting for, most wanting to see, really is what are the acreage numbers here? Because we had a report at the end of June, and we were still planting the crop, and that report got a lot of derision out of people in the trade because of the numbers they put out. The USDA did 80 million acres of beans, which didn't shock people, but 91.7 million on corn did shock people, a lot bigger than they thought. So a lot of people have been suspicious of those numbers. So we're really looking to see what the USDA releases as acreage today, because they went in and they resurveyed 14 states in the Midwest, and that's huge. We also get at the same time from another government agency underneath the USDA, the Farm Service Administration, at 11 o'clock, we'll get a report on the numbers of acres put in farm program, which also tells us acres of corn, acres of beans, understanding, we have a lot of land that is farmed outside of government programs, but the important one is everybody's looking to see what that prevent plant number is, because with crop insurance policies that farmers have today, if it gets so late, they can take what's called the prevent plant claim. And what they do is collect 55 or 60% of an insurance guarantee and just have to sow the field to a cover crop. They'll never plant it to corn or beans or wheat or whatever the case may be. So people are really looking for that prevent plant number to see how high it is and see if all these acres fit in the matrix. Right now, I'm still thinking that, the acreage number is going to come down a little bit. I'm roughly around 89 million on corn. The trade seems to be just around that level. It seems when I looked at the trade averages. The beans, I'm a little different. A lot of people don't think we'll see any growth in beans. They're staying somewhere around 80, but I think we could see it upwards of maybe 82 million on beans. And the reason when we get so late, if it's too late to plant corn, whether it's from the calendar or it has to do with the insurance policy details, you can still rotate in the heart of the Midwest, as that land over into soybeans. So I think soybean acres will be up a little bit in here from where the USDA predicted roughly a month and a half ago. But right now, big news coming at 11 today and a lot of volatility. Will it set a bottom or not? You tell me the report, because you were through the grinder in the grain markets. USDA reports always have surprises, and you never know which way they're going to come.
Yeah. So do you stay flat and then react to the reaction of big reports like that?
I tend to, with this report, we've had a pretty good break in both corn and soybean prices now since the flood worries wore off back in middle of June, that you really question, can we have much of a bearish report? But at the same point, I'm sitting here today Central Illinois, we had about an inch rain last night. Wasn't universal over the whole state, but we got another frontal system coming through today. And somebody says, I don't know if this is $1 million rain, but yeah, I think it is a real important rain, and it's hitting a lot of areas. So we're going to give the crops a real good drink of water. Still going to be deficient, but you know, it says, I live to fight another day as far as the plant is concerned. So I think the weather's a little bit of a negative. So I don't know that we have a real big bullish reaction. And in fact, you know, going back to timing, here just to talk about it, let's go to corn for, you know, this is this long haul. I look at a couple of cycles. One's 5.5 years in corn, another one's we can roughly say 2 years, and you can see those lows counted out there.
Yeah.
The 5.5 year bottom back there at late 2014, so it's due in 2020. The 2 year cycle actually bottomed back in 18, at the end of 18, so that puts us out into 2020 as well. But in the short term, there's a another cycle in corn. I don't have that to show on a graphic of 40 weeks. It also breaks down into a 20 week, and that one will break down either into 2 10s or 3 6 to 7s. But those lows out there really are due somewhere right at the early or middle part of September. So I tend to think the market's going to be sideways with potentially a lower bias if my timing counts are right. Doesn't mean we have a hard break, but it just says I don't think the odds are in favor of seeing a much of a rally. If we back up and look at beans, you have, as well as those 9 year cycles, you have a 36 to 39 months, so let's just say 3 year cycle. That bottomed actually at the end of 18, although this recent low here at the beginning of summer may count, but I tend to think the older one will be better. Now, there's also a 2 year cycle in beans that tends to rattle through here as well. So I think we've got lows behind us in corn and beans, but in the beans, like the corn, I've got a shorter term cycle that's 32 weeks in length, and that's due somewhere around the end of August. So I see some short term cyclic things suggesting continued general weakness. Cycles only tell you time, they don't tell you price. And I think people need to always be important and aware of that distinction in looking at markets, and not to get hung up that I have to have a major low because I've got a cycle low due. The only time you tend to see those major lows is when you have a confluence of a lot of the other cycles come into the mix here. So the report today, I don't think it's bearish because we've hit the market so hard, or I don't think we'll see much of a bearish reaction. I think the weather works against it some. But even if the report's bullish, I don't think we have any more than what I'm going to say, some kind of a recovery off the break we've had since back in the early part of summer. So
I'm going to ask you to put on your Nostra Dirkholz hat and tell me what you're going to be stalking and monitoring for the remainder of the year. Are you leaning towards a culmination and confluence of major lows coming into the grain markets that over the next 6 months or so that would put you in an accumulation mode to have your toe in the water on the long side?
I think, you know, when I look at the next 6 months, my point is being potentially a little patient, assuming I don't get any real huge shocks here today. And looking at those shorter term lows here, let's say coming somewhere around Labor Day. Okay. And at that point, I would be looking for that opportunity, looking for the sign to start to accumulate some long positions. And the real reason I come back at this, I go back to 1993 as somewhat of a guideline, corn in particular. It's the realization as we go through time that the crop isn't as good as we thought. And I don't know that the yields, unless they give us some kind of a huge yield today, are going to go down a lot. For example, my trend yield on corn that I use is somewhere up around it's around 172. The USDA is already at 166. Their trend yield is that they use is up around 176.7, and we're already at 166, and I think that's roughly where we're going to end here today, or show here today, on corn yield.
Okay.
But in 1993, the first report we had on crop production, official report in August of 93, was on corn, 116 bushel on yield, and we ended up at 102. And I think as we see the combines roll, we're going to find that unless weather is just absolutely fantastic and frost is delayed extraordinarily late, that yield isn't there. The big thing I'm watching when you look at some of the fundamentals, every Monday, the USDA puts out a weekly crop condition report. I'm not so much looking at the condition of the crop itself, that at the same time, they also put out numbers on progress. In other words, in corn, how much is pollinated. Then we go into how much is in dough stage, where we fill out those kernels, and how much is in dent stage, and eventually how much, what percent of the crop is mature. I think those progress numbers, because we planted so late, are really important. And as long as they don't catch up significantly, it puts really at risk the back end, because if you get a frost freeze that comes in about normal, you truncate the back end of the growing season, and you truncate the yield potential of the corn, as well as diminish the quality in some fields. So,
Okay.
I'm really looking to be an accumulator, thinking somewhere at these lows we get right at the end of August, probably into early September.
Okay, what a great presentation. I learned so much from you today, Dale. And I know you're retired. Are you providing any kind of service, or are you just going to be doing your own thing in the markets and just have a few private clients? The best way for people to follow your work is it Twitter at
Grain cycles.
yeah, grain
Right,
underscore
underscore.
cycles. Is that the best way?
Right now, that is. I'm still haven't got totally ramped up yet. I'm putting together a website on WordPress.
Okay.
It'll be tied back to my Twitter feed as it is. I'm not going to get into this routine of doing things daily. I'm going to tend to do things more of a big picture, but I'm still going to be looking at markets both as a fundamental and as a technician. I'm going to look at it from a cyclic perspective and see what that tells me about the market. So I'm going to do some speaking. In fact, I got a speech set up for the end of August in Chicago itself with a bunch of Brazilians. Going to be doing some speaking, working with a group out of Indianapolis, and going to be doing some private consulting and thing. But people can always reach me at my email or message me back on Twitter at Grain Cycles. But here soon, I'll have the website set up.
Well, you're my trading warrior brother now, like it or not, right?
Yeah.
Okay. And you know what? In your retirement here, Dale, I hope that everything you touch is a bumper crop for you, and that you enjoy these years, and wish you a lot of success in spreading a lifetime full of wisdom to people that are just familiarizing themselves with one of the most important sectors of our economy, because every day that we sit down at our dinner table, it's the hard work that you and your family and other farmers across the country have put in for us to have sustenance. So, may every crop you plant be a bumper crop, Dale.
I'll tell you this, getting away from the day-to-day grind, though, has been real relaxing.
Yeah, smell the roses, bro.
I've thoroughly enjoyed not having to get up and do the grind. I tend to read news wires. And
looks like you're taking to it like a fish in water. Some people can't adjust. I planned my retirement slumping over on my keyboard. All right, Dale. So really a pleasure meeting you. What a great primer for people that are interested in things outside of currencies, and even covered we should be aware of what happens with the dollar here, whether we get a continuation or a truncated fifth. Excellent interview, my friend. Thank you so much for edifying face.
Hey, it's been good talking to you there. I've enjoyed it today, and we got to revisit some old times. I don't
Oh
get.
yeah, wait, I'll put my time machine away now.
Oh, by the way, you would like to know the Merck is thinking about reviving the pork belly contract.
Oh my goodness. Well, good.
Seriously.
Because every exchange floor has turned into a bowling alley. I would love to see open outcry come back. That won't happen.
The issue with pork bellies is the amount of bellies we're using now day to day, and the service companies, and they have no vehicle to try to guarantee their price or to hedge their price at all, long or short side, either one. So there's a real huge interest.
That was my first day at the Merc in the gallery. I saw Bellies Go Fast Market with Bill Henner and Harry the Hat and all those guys down there. So there's a flash from the past for you too, Dale.
Oh, yeah.
Thank you, buddy.
Good talking to you.
All right, everyone. That's Dale Dirkholtz, and you could follow him at grain_cycles. And really important for you to pay attention to this sector, because if you like to eat, you're going to want to know what's going on there. So thank you, Dale. That's a wrap for us. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. See you tomorrow. I have Jamie Satley coming in tomorrow. He said buy TLT at 124, traded as high as 143. Talk to you later, everyone. Adios. Thanks, Dale.
Thank you. Talk to you later.
All right.